Hey guys, it's Julie here with TipRanks, and today we're taking a look at 3 top analyst energy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks in the energy sector that have picked up buy ratings from top Wall Street analysts lately and do come in with a strong buy consensus overall. So we're going to take a look at these companies, what it is that they do, and what those Wall Street analysts are predicting for the stock's future. We found these companies over on the TipRanks Top Analyst Stocks page. Found right under the Ideas menu with Analyst Top Stocks, we'll find companies that have recently picked up buy ratings from 5-star analysts, and we narrowed in on the energy sector to get our list down below. Just before we get into today's energy stocks, I want to say a quick thank you to all of our new and current subscribers. We just hit that 70,000 subscriber mark, which is an exciting milestone, so thank you all so much for your support. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 3 top analyst energy stocks. First up today is Diamondback Energy. They trade under the ticker FANG, or FANG, currently priced just above $181 per share. They are in the green, up 21% year to date, but in the last 6 months have fallen nearly 9%, slightly green this past week. Diamondback is an independent oil and natural gas company. They acquire, develop, explore, and exploit unconventional oil and natural gas reserves in the Permian Basin of West Texas and New Mexico. Their activities are primarily focused on the horizontal exploitation of multiple intervals within the Wolfcamp, Strawberry, and Bone Springs Formation. They also focus on their environmental strategy that reflects that the world is transitioning to a lower carbon economy. They embrace their role in providing the safest, cleanest barrels of oil possible and are continuing to adapt their work processes to succeed in the new energy economy. Earlier this week, Diamondback did share their third quarter earnings report, and results were mixed, with a miss on earnings but beat on revenue. For their third quarter, they reported earnings per share of $3.38, which did fall short of expectations, while revenue of $2.65 billion grew 13% year-over-year and beat by $240 million. During the quarter, they did close a merger with Endeavor Energy Resources. They also declared a 90-cent dividend and repurchased about 2.9 million shares. They also increased their share repurchase authorization to $6 billion. Following that earnings report, we did have a 5-star analyst from Mizuho Securities weigh in. They said that Diamondback has shown a proactive approach by planning ahead of schedule with their post-merger integration, which includes a notable asset trade that optimizes their operations in the Midland Basin. They've also demonstrated a strong commitment to shareholder returns, distributing a significant portion of their free cash flow through share buybacks, reinforcing confidence in their financial management. Overall, the stock has 21 current analyst ratings, coming in as a strong buy with 19 buys and 2 holds. And the average price target comes in at $219, implying an upside potential of over 20%. Looking at those recent ratings down below, we do have to scroll back a ways to get to our low end. It is this hold at 185 from back in October for a slight upside just shy of 2%, while our high-end price target comes in more recently here, 255 from TD Cowen for an upside of over 40%. For our second energy stock, we're taking a look at Permian Resources. They trade under the ticker PR, priced just above $15 per share. Overall in the year, they have gained 20%, though they were in the red over the last 6 months, down about 10%. They have returned back to green recently. Permian Resources is an independent oil and gas exploration company, and as the name may give away, their assets are located in the Permian Basin. Their land holdings total more than 400,000 net leasehold acres, which includes more than 68,000 net royalty acres. Their holdings are focused in the Midland and Delaware basins of the larger Permian Formation, and some 45% of the production on these landholds is crude oil. This makes Permian one of the region's largest pure-play hydrocarbon E&P firms. Their latest quarterly report just came out yesterday on November 6th, where they reported both an earnings and revenue beat and an increase to their full-year guidance. Their Q3 earnings came in at 53 cents per share, beating expectations by 21 cents, while revenue of $1.22 billion beat by $10 million and increased 60% year over year. On top of that, the company increased their base dividend to 15 cents per share, which was a 150% increase compared to the prior quarter, and they received some upgraded credit ratings by Moody's, S&P, and Fitch. The increase to their guidance was their third consecutive increase, primarily driven by strong performance of base business. The most recent analyst rating does come from a 5-star analyst at Siebert Williams Shank. They reiterated their buy rating, noting the impressive third quarter results and the increased full-year oil production guidance. They said the company's implied fourth quarter production guidance exceeded both the firm's and consensus estimates, and that they also exhibit operational efficiencies evidenced by reduced drilling and completion costs, which are expected to positively impact the company's 2025 capital expenditure. Permian Resources has 15 current analyst ratings, almost coming in as a unanimous strong buy with 15 ratings, with 14 buys and 1 hold. Analysts' average price target comes in just above $18 per share for an upside potential of nearly 20%. Looking at those recent ratings down below, our low-end price target of $14 is from Benchmark with a downside of about 7.5%, while our high-end price target comes at $21 for an upside of 38%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Third on our list of energy stocks is Navigator Holdings. They trade under the ticker NVGS, currently priced at $15.64. Their stock has gained over 12% in the past year, did drop a few percent overall in the last 6 months, but is back in the green in the last 3. Navigator Holdings operates a fleet of liquefied gas carriers. In fact, they own the world's largest fleet of handy-size liquefied gas carriers, which are fully refrigerated vessels that act as a floating pipeline between producers and consumers. They provide transportation services for petrochemical gases, ammonia, and liquefied petroleum gas, and they provide these services for energy companies, industrial users, and commodity traders. They own a 50% share in an ethylene export marine terminal in Morgan's Point, Texas. And they also just shared their latest quarterly report yesterday on November 6th. We saw some mixed results with an earnings miss but revenue beat. For their Q3, they reported earnings per share of 29 cents, falling 3 cents short of analyst expectations, while revenue came in at $141.8 million, up a few percent year over year, beating estimates by over $19 million. The company announced a 5-cent dividend for the quarter, and also that they plan to repurchase approximately 1.1 million in common stock. This follows their Q3, where they repurchased about 2.3 million worth of their shares. A 5-star analyst from Alliance Global Partners just recently initiated coverage on the stock. Rating it a buy, they cited the company's consistent operating results, enhanced gas carrier fleet with recent new build announcements, expanding export terminal exposed to an attractive gas carrier market, moderating financial leverage, and a favorable return of capital policy. Navigator's current valuation is attractive, said the analyst. Navigator Holdings does just have 5 current ratings, but comes in as a unanimous strong buy. And the average price target of $21.40 implies an upside potential of over 36%. Looking at those ratings down below, all of them in the double-digit upside here. Our low-end price targets are a couple at $20 from back in August, with an upside of nearly 28%, while our high-end price target does come from Alliance Global at $24 for an upside of over 53%. So that is a quick look at 3 strong buy energy stocks, all picking up buy ratings from some 5-star analysts lately. Let me know your thoughts on these companies in the comments down below and which stock catches your eye the most. I always appreciate hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any stock, so please make sure you always do your own research and due diligence. Thanks so much for watching. I hope you have a wonderful day, and I'll see you back here next time.